Without further ado, I would like to introduce our first speaker, Nikita. So if I could ask Nikita, and also for other panelists, as and when you are on speaking, please do have your cameras ready to turn on and to also unmute yourselves. And when you are not speaking, please kindly leave yourselves on mute as well. Nikita Bersenev, welcome. It's a pleasure to have you join us today and to start this, the second day of the conference. Nikita is a quant analyst here at Deep Knowledge Group. He is a quantitative analyst and a former researcher in the field of matrix theory and control theory, which is ICS-RAS. And he's interested in financial models, including stock performance prediction based on financial and non-financial parameters. At Deep Knowledge Group, he provides quantitative analysis and performs market research, as well as developing pricing models. Nikita has a good experience in managing long equity portfolios, and he holds a master's in physics from MIPT in Moscow, and he's currently finishing his Masters of Finance at the University of Bologna. And I believe you are a CFA candidate as well, and you've passed 2 out of 3 of your exams with 1 pending, right?
Yeah,
congratulations. Wonderful. Great to have you with us, and the floor is now yours.
Can you see my screen?
Yes.
Okay, great. Yes, that's correct. I'm a quantitative analyst in Deep Knowledge Group, and I am presenting today the topic of alternative data in investment process. In particular, I will talk about alternative data for public equity, investment in public equity. Okay, so let's start from the definition maybe of alternative data. What is alternative data? Normally, when we speak about alternative data, we mean the data which is not coming from the insiders of company, which is not coming from, let's say, normal source of information like annual reports, quarterly reports, or press releases. So it's any other data that we can obtain about the business, about the company, about its financial structure or operations or core business or anything else that we can obtain from other sources. So the first question which we should ask ourselves is why we need this. Why do we need any additional source of information besides from conventional sources, which I listed before? First of all, I will just list 4 reasons, which are quite obvious, but let's talk about them. First of all, in financial reports, the management put the information they want to put and they are obliged to put. There is no way to make them put some information. For example, let's imagine that what they want to show the earnings of the company for a particular quarter a bit higher than they are, and they don't have any regulation that prohibit them from doing so. They can do it. They can manipulate it a bit, and it's very frequent practice. Alternative data can help to detect it and to take it into account when we make our investment decision. Completeness of disclosure, quite again obvious point. Typical private equity today is huge corporations with maybe several child companies with operations in 100 countries maybe, and of course one press release or one SEC filing which can contain even 100 pages is not enough to disclose all details of business which can be relevant to investor. Third thing is frequency. It's quite normal to know some news about operations, some material information about company operation on the date of SEC filing disclosure or annual report disclosure if we are talking about companies not listed in the United States. And of course, the events which lead to the numbers which we can see in this disclosure, in this filing, can happen before. And it's important to know about them before it's reported in the filing, in the annual report. And it can be a comparative advantage for investor to know something before other investors know. So in this way, we a bit touched the 4th point. all annual reports are extremely common to use among all market participants, among all investors. So as it's famous phrase by if I'm not wrong, Benjamin Graham, that successful investment strategy should be unpopular. It should be the strategy which not everybody uses. Otherwise, it will never be better than average. So if you want to outperform the market, you should probably think about source information which are maybe not available to others, but not took into consideration by others investors, or at least by most of investors. So we should, of course, touch important point that types of information which we might be interested in, it can't be private material information, even if we can somehow take it from external sources. Some well-known mosaic theory, which is for example, referenced by CFA Institute or other organizations. Analytics should rely on public material information and non-material information, both public and private. So when analyzing data, we can collect by pieces some info about revenues, about future profit, about future events which can happen to company without breaking the law, without doing insider trading or like this. Let me provide a few examples of data which can be used as alternative data. A very popular thing when we're talking about some companies which are selling anything is foot traffic, which is number of customers entering the location. It can be tracked by geoposition on mobile phones, by sensors, cameras, by Wi-Fi networks, by connections to them of clients. Satellite images is very popular thing. As soon as we have more and more information, more and more photos from space, we can use them to identify factors which can be important for business. Just to give an example, we can see different weather factors. For example, if some agricultural company, has visible from space clouds above its fields, we can make some conclusions about its future profitability. Just simple example. Website usage, of course, it's very important, and as well we can talk about some analytics from search machines like Google. If some name comes more and more popular, we can make some conclusions about it, about future revenues, maybe growth of company or clarity among users. And of course, social media posts, sentiment analysis, which can be useful as from point of view of understanding market sentiments, so how investors feel about this company. And on the other hand, it can tell us something about the fundamentals about the business itself. The sources from where we can take the data are actually unlimited. I just mentioned a few of them. Copernicus is a space satellite image project, which can provide photos of Earth observation data. And Twitter, LinkedIn, Facebook, I think I don't have to mention what is this. Refinitiv is the well-known company which provides, among others, good sets of alternative data which can be used for investing. Different types of data, they are in this business quite a while. Google Trends, which can help us to understand the popularity of some names, of some products. And SafeGraph, it's a database of foot traffic. If I'm not wrong, yes. Yeah, I think so. So I'm sorry if I'm wrong. I just yeah. Okay, one particular example of alternative data, which is very popular nowadays, is ESG. ESG parameters are collected into ratings, into some ESG reports about companies. They are taken into consideration by a lot of investors all around the world, and we have reasons for that actually. First of all, ESG is a popular topic, and of course, people are thinking about it. People try to be, I don't know, try to make their investments maybe more ethical, maybe more bring in some benefits to society in general. Also, ESG can be a good indicator of business itself, because as I will say here, yeah, maybe let's switch for a second. 60% of typical ESG weight, ESG rating is based on governance of the company, and of course, the governance of the company is the very important criteria of how business is running, of how good is business. Is it capable of making profits above average, or it's not? So even for investor who just wants risk-adjusted return and doesn't care much about climate or social factors, it can be useful for him to evaluate ESG parameters. There are some screenshot from Safe Institute ESG guide, which you can find some factors into ESG, typical ESG report, typical ESG evaluation. There are weights of these factors. Maybe we'll not talk about it for long. You can take a look. It's maybe interesting. Especially maybe it's interesting because ESG often is perceived as green, something connected to environment. But in fact, it's more about different things. Yes, environment, of course, it's important, and of course, they take into consideration the carbon emissions and all these things. But I can say that way of managing companies takes more weight in typical ESG rating. So maybe to conclude, I would say a few words about how actually our ideas about ESG or other alternative data that we do for a company can influence our decisions on buying or selling. Actually, there are three channels how alternative. Okay, let's say how the way company makes business, how the way it governs itself, how the way it makes business comes into the stock price. First thing is cash flow channel. I took this picture from the paper about foundations of ESG investing, which can be actually used for any can be extended to other alternative data. So I will say here about ESG, but you can keep in mind that you can add some parameters here. Strong ESG profile is typically leads to more competitive company because of good governance, because of effective supply chains, because of loyal workers, because of maybe good compliance with regulations, and it leads to higher profitability of company. In this simple way, makes business better, higher dividends, or higher growth of capital in case the company doesn't pay dividends, for example. So it can make company more valuable in this simple way, making business making more money. Idiosyncratic risk channel shows us the different thing, which is also important when you invest. Think about tail risk, about the possible drawdown of stock time series. Typically, company with good governance, company with efficient management, with strong ESG profile, has a good risk management as well, and manages risks which are important for its business. So we typically can say, and some papers confirmed this, that company with strong governance, with strong management, are typically having lower downside deviation, we can say. So they are typically falling less than other companies in case of some negative events, which is of course important for risk-adjusted metrics. If we have lower risk of this company, all our investments seems to be better. And the last one is valuation channel, which comes from which comes from, first of all, from bigger investment community, which are interested. You know that a lot of big funds are require some standards from company. So if the company can correspond to the standards, it typically have a lot of demand for its financial instruments, for its stocks, for its bonds, it doesn't matter, and has a lower cost of capital, lower interest rate used in discounting cash flows or anything, and have just higher price, higher valuation by investors, which in the end can lead us to higher stock price and better performance of our investments. So to conclude, I should say that alternative data is very important and not maybe very not very good explored way of evaluate company, mainly because it requires, of course, dealing with big data, dealing with a huge amount of data. We should analyze, I don't know, foot traffic. Of course, it's not a Excel table with 20 numbers. It's millions and millions of data points, and we should be able to analyze them quickly to make conclusions, and probably analyze not only one company at the same time. So this is the area which can bring us a lot of insights into business, which can make it more objective, make the evaluation more objective, remove the reliance on management honesty or anything from our idea of how business working. We can evaluate it more objectively, more maybe efficiently, more honest, and manage our investments better, have higher returns, understand better what exactly we are investing in, and be less exposed to any kind of manipulations or inaccurate information provided in press releases for financial reports. Thank you very much for your attention. I finished for today.
Wonderful. Thank you so much, Nikita. That was really insightful, and I'm looking forward to addressing some of those points later during our panel. Thank you to all of those. Thank you. Thank you to all of those who have also just joined us. Just to make you aware, this session is being recorded, so you are able to have this sent to you later as reference. And also for those that weren't able to attend yesterday's session either, you will also be able to access that recording too. Also, please pay attention to the chat box below, where we will be sharing with you details that relate to some of the speakers, from their profiles, their socials, their Twitters and LinkedIn profile links as well as other details such as a link to the big data analytical system. Thank you very much, Tanya Bell, for sharing that for us today, with a lot more of the statistics and references that came from Nikita as well.